Hey guys, what's up and welcome to a new Tesla update video. In this one, as per usual, we're gonna go over the market, see what happened today. Honestly, overall, an extremely snooze fest of a day. Not a whole lot happened, but nonetheless, we'll go over and essentially what we can expect for the rest of the week, as we now have, of course, a full week of trading. I believe, by the way, very important number or date, I guess, to keep in mind. Correct me if I'm wrong, but I believe it's this Friday. We get the CPI number again. So that's, as usual, you guys know how CPI numbers are. Which is why I wouldn't be surprised if we get a relatively slow-ish first half of the week, and then maybe as we get closer and closer to the CPI, and especially the day of, when you're gonna potentially start seeing some increase in volatility and whatnot. That's just my guess, of course. Usually it's like that. Usually it's a little bit slow up until these kind of big data points, if you will, get pretty much announced or revealed, because people are kind of waiting for that result to trade it essentially, or like to see like if it's good or bad based on how they want to partake in the next day, week, or even months of trading or something like that. So that's essentially one thing to keep in mind, that there's definitely a chance for that. Nonetheless, though, Tesla today ending the day at 7:15, pretty much on the dot, actually, at 1.63% in the green, which is not too bad at all. So let's discuss what happened and what we can expect. So number one, you can see obviously we're still kind of in this channel as we fell back in after this false breakouts. But the point that's important is the fact that we did, let's go in 2 hour, we did bounce off of 700, which is really, really good, because we closed essentially just shy of above 700 on Friday. And I'm actually surprised today was on a relatively green day. I mean, the indices and everything were fairly flat. I mean, 0.35 for the QQQ, 0.3 for the SPY, and Tesla being at 1.63 means it did outperform the market, which is good, because there is news about Elon, apparently, how he is essentially fighting back against the whole Twitter thing and trying to get either a lower price or walk away because of the whole bot issue with Twitter and how they report that. So there was some kind of, like bullish news around that regarding Tesla, because if he doesn't buy Twitter, if he walks away from Twitter, that kind of takes away an overhang on Tesla stock. So all in all, that was like a potential positive for Tesla, which is why it slightly outperformed the market today. But nonetheless, we're still in this channel, right? We had that false breakout, of course, fell right back under, held 700, which is great. Now, essentially, what I personally wouldn't be surprised is I still wouldn't be too shocked if we potentially visit 680. Now, obviously, I would prefer not to see that. Ideally, I don't want to see 680 tested. But with that being said, if it does, happen maybe tomorrow or like at some point in this week, for instance, because if it does happen, it will be this week. If it ever happens, if not, then not, then fantastic. But if it happens, it will very high chance it is this week. So, in the case that it does happen and you see it plummet to 680, don't get too worried. It does get a little more scary, in my opinion, if it does break 700 and retest 680, because that's like, in my opinion, the final line of defense, if you will. But there's 680, in my opinion, is still a very viable support to test. Hopefully, of course, bounce off, but still kind of remain, bullish, in my opinion, for the next leg up to, actually still take place, which again will take us to like mid 800s roughly. We talked about that last week on Thursday, I believe, or Friday. It'll take us to around the mid 800s, just for simplicity's sake, which is good, which is perfectly fine, and I think that'll be great. Now, ideally, I don't want to see 680 tested. Ideally, I'd want to see that kind of, not be a thing, but I'm actually going to remove this one. I don't really like that one that much anyways. But yeah, so nonetheless, but that's number one. So again, don't be too shocked, because it'll still keep intact this kind of bullish inverted head and shoulders pattern, which I'm still perfectly happy with. And I personally wouldn't, be too worried about that at all. So keep that in mind, guys. That is one thing to keep in mind. We are still kind of in this like little flag, if you will, bull flag. You can see right up here we kind of came up, and we're still kind of trading within this little mini channel of the larger channel. I had this false breakout, of course, but sometimes you can kind of ignore these kind of quick one-offs, if you will, mainly because it didn't maintain it, right? So you can kind of ignore this quick little breakout, and we're still essentially trading within this channel, which is perfectly fine, which is why if we do break down to 680, it will kind of be more or less retesting the bottom of this channel. So again, it wouldn't be too surprising if it happens potentially like Wednesday or something like that. Yeah, like potentially Wednesday, maybe even tomorrow, honestly. So we'll see what happens with that, of course, but just that's something to keep in mind, so you don't get too worried if you see that happen. But regardless, ideally what we want to see is, of course, one of these patterns to play out. Again, we have essentially a bull flag, a cup and handle pattern, which is kind of wonky because of this, but nonetheless, it's still relatively there. But most importantly, in my opinion, of course, we are still with holding the inverted head and shoulders, being the shoulder here, the head and the shoulder, which is now forming here as we hold 700. But the thing that I said about 680 is the fact that even a 680, in my opinion, would still make that bullish kind of head and shoulders, inverted head and shoulders pattern still viable, as it will with the cup and handle and bull flag. All of that will still be, in my opinion, viable, which is essentially, in case people were asking like, oh, what do these patterns mean? It's essentially like bullish patterns that get set up. There's a whole like list. You can, if you just Google it, you can find a whole list of bullish and bearish patterns. But it's essentially a bullish pattern that signifies that there is potentially a reversal coming up. Those three patterns, like a bull flag, an inverted head and shoulders, and a cup and handle, they're all three of them are bullish patterns that signify that as long as they of course hold, that there is potential bullish a bullish pattern setting up that it can break up to the upside in this case, or aka a reversal. So in this case, for instance, the way you determine how high you would go, let's say off of the inverted head and shoulders, which is my current favorite pattern setting up here. Pretty much the way you look at it is this, right? So you have a part where it always happens in a downturn. That's why they're considered reversals, right? Because it reverses the current trend. In this case, we are, of course, in the trend of a downtrend. So in that case, what would happen is, as you're downtrending, you would have like a bounce off of a certain area, a bounce in a lower area, which is this, which forms the head. So there'll be a shoulder head, and then you walk up to the neckline, which was from the previous shoulder, which in this case is around that 780 to 700 level, somewhere in that range, but around the 780 level, in my opinion. So 785, that's the neckline, because, you know, we got rejected there, then came down, made a lower low, which in this case ended up being the shoulder or the head. And then you came back up to pretty much the exact same level as the shoulder, roughly, right? Couldn't really break above it, which is again around that 785 level. And then we kind of break back down. And ideally, what you want to do is not break lower than what the first shoulder did, which ideally, as you can see, there's plenty of bounces on the 700. Ideally, I'd want to see 700 hold the way we are here, which is great. But because this shoulder did bounce off, you can see here, of 680, to me, that creates 680 as still a valid opportunity. But I also don't want to break below what this kind of, you know, pattern or the trading range that we had here on the head. I don't want to break below that, which in this case would also be the 680. So the 680 to me is the most important level not to break, but ideally I would love to see 700 hold and not fall below 700, ideally also. So that would be fantastic too. But nonetheless, that's essentially what that is. And the way you determine how high you go is you essentially take the bottom of the shoulder, of the head, which in this case would be around this kind of 620 level, and you measure up to roughly where the neckline is, give or take, right? And then what you do is, based on where you break out, so in this case, let's say if we break out from around here, you kind of measure it, and it kind of gives you like a general idea as to how high you can go, which is why it brings me up to like that mid to potentially high 800s level, is roughly where it gives you. Same with the cup and handle, like you have the kind of cup over here, right? Creates that and then creates the handle, which again, this kind of thing makes it a bit awkward, but it's just, you can consider this as like a one-off outlier, which is fine in my opinion. But essentially it's similar concept where you have the cup and then the handle, right? It kind of, you know, gives you like an ovally shape, kind of also signals a reversal on its way, and this essentially being the handle, or in this case also a bull flag. Same concept, that the neckline is the exact same neckline. So once again, what you would do is you would measure it, and then for the cup you would essentially measure it from the breakout of the handle. So let's say we break out somewhere around right here. Let's say we end up trading and we break out like right around here. So what you would do is you would take this from the bottom of the cup to the top of the neckline of the cup, and you would essentially measure it like this, and it would give you a rough idea as to where we can go, leading us in this case around 880. Doesn't mean you'll go exactly to 880 and bounce off of from there, but it just gives you a general idea as to potentially how roughly high you can go, which is why I wouldn't be surprised to see around that general level being visited. Another way you can also look at it roughly is the Fibonacci levels, right? You go from the top over here to the bottom over here, and then you can see it brings us right up to that 0.5 level of around 880, which also kind of signifies that I wouldn't be surprised to see somewhere around 880 being tested, again, give or take, you know, maybe 20 points or so. But that general level is where the level I would be personally looking forward to, assuming we of course break out and hold out of this breakout, as opposed to this where we kind of broke out and then got sucked back in the next day. You'd want this to happen, but then you'd want to see bounces off the red line, or just essentially hold for a few days sideways, which consolidation in that case would be very bullish, because it says that, you know, there's no selling pressure, we're not falling back down, we're not getting slapped back down into the trend line or anything like that, which all in all, in my opinion, is of course a fantastic sign. So going back to the daily very quickly, let's take a quick look at the Bollinger Band. You can see here we are kind of getting rejected here by the white part of the Bollinger Band still, so we're definitely gonna have to get some resistance breakthrough happening on the white part of the Bollinger Band, and of course the channel that we're still in, the downwards channel being this red line. So we definitely want to go ahead and see breakouts from there, which in turn will essentially be, if we can get a nice solid breakout around like Honestly, at this point, just to make it simple, it's 730. If we can get it well above 730 to 735 and maintain above that from here on out, that would to me could be considered fairly successful and most likely considered a breakout, assuming of course we hold it and don't just collapse right back under once again. So that's something else to keep in mind, quite important as well. Taking a quick look at the moving averages as per usual. In this case, we have this is the 10-day moving average. You can see we actually ended right above it, which is great. So we did bounce off the 10-day moving average, but I believe we are still below the 5-day moving average, which we very much are, which we kind of bounced off from the top almost over here. You can see, which is essentially lining up with the red line as well and the Bollinger Band. So that's going to be the resistance, and then the support will be that 10-day moving average at the very moment, on top of course 700 being a psychological level. The RSI, in my opinion, still looks okay. It is below 50, which, you know, below 50 is still considered, you know, a little bit more on the bearish than the bullish side, but it's definitely, you know, you can see it got rejected here, but it's definitely looking like it wants. It's still above the average of the RSI over here, and we're maintaining above that, which is extremely important in my opinion as well. So overall, the RSI looks like it potentially might want to go ahead and look for a reversal as well, which is fantastic as well. Another thing you can look at as a way to determine potentially how high we can go, assuming we break out, of course. Another one, it could, you know, is a 100-day moving average, which is a decent moving average at the moment, is sitting around 892, but is going to slowly start trending downwards. As long as we continue going sideways or even downwards, it will start slowly coming down to us. So by the time we break out and run up, it could very well be around this 860 level, roughly, give or take. That's also extremely possible. You know, you can see here we bounced several times off of the 100-day moving average, right? Over here, we bounced right off of it. Here, we bounced downwards. So it's a decent moving average to look at. But essentially, again, what you want to do is you want to take as many factors as possible, as many checklists, if you will, and as many check marks that you can, you know, check mark off. Essentially, that can give you a better idea as to where you can go and what the next movement can be. Now, the last thing I want to take a quick look at is, of course, going to be on the 1-hour chart. We can look at the Bollinger Band. So you can see it is getting a little bit wide here. It is a little bit wider on the 1-hour chart. So what we can do is we can look at the 15-minute chart. On the 15-minute, you can see it's getting much, much tighter. So in this case, what it's telling me right now is after this big move, I wouldn't be surprised to see, again, potentially a little bit more consolidation. But the idea when you see the Bollinger Band get this tight, especially the longer it stays this tight, the more explosive the move will be. But essentially what you can expect from this is the fact that we are going to be getting a big move coming very, very soon. Honestly, potentially even tomorrow, but most likely tomorrow or Wednesday, in my opinion, would be my guess. But sometime this week, essentially. But the longer it gets, the tighter it gets and the longer it remains tight, the more explosive the move will be, whether it's to the upside or to the downside. But again, the way you usually want to do this is try to figure out you know, how many more things point to upside than to the downside, or vice versa, right? And at the moment, I'm still thinking that there's more things pointing to upside than to downside. So that's kind of what I'm personally projecting at the very moment. Now, in case you're wondering what I'm doing in terms of trading and, you know, whatever, I did trim this morning. Essentially, as the market opened, I trimmed. I sold shares, not of course all of them. I sold maybe like 15%-ish of my shares that I have. So I'm still holding the vast majority of them. But I sold some of them just, you know, and I re-entered very, very slightly around 710. And I sold them that small portion of it, you know, just, you know, it wasn't those specific shares. Those are my like trading shares were in profit. I sold them, you know, and then I'm ready to buy back lower if, just in case we drop all the way down to 680. I'm mainly holding out for that. If we don't, fantastic. I have a bunch of shares that are still riding this upwards, and I'm happy to ride those up, no problem. But, you know, in case we do fall down to 680, it won't feel as bad because I can, you know, buy the dip essentially, assuming of course we hold 680. So that's essentially my current position, and that's kind of what I'm seeing at the very moment. Hopefully it's useful to you guys. If it is, of course, do me a favor and hit that like button. It does help a lot. Make sure you subscribe, turning on the bell notifications. But until then, I'll see you guys tomorrow. Peace.